your kids have to be buried too. And, what's unfortunate is that you'll see a lot of times where, a child will die and the family doesn't have the money they need to bury the child. It doesn't have to be a big policy. And life insurance policies for kids are so cheap. They're so inexpensive. You won't even notice it, paying it every month. And I think for a lot of parents, it's just hard to even imagine something happened to their child.
Morbid, to take a policy out on your child.
Right. Well, life insurance policy does not mean that you expect it to happen.
I know.
It just means it's like Chris Rock said, in case shit. In case shit happens, you want to be prepared. And you don't want to sort of compound the tragedy by having financial problems at the same time. Because a lot of people, most of our people, really, their biggest stressor in life is money, is financial.
Do you think financial problems can cause mental health issues?
Absolutely.
Oh, yes.
Yeah.
Absolutely. It affects your life in almost every way imaginable, from increasing your likelihood of divorce, increasing your likelihood. I mean, talk about the stress. I did research on this, and the stress just of going to work every day at a job you hate, it kills you. You die sooner.
They said that's the number one cause for divorce is financial issues.
Yes, absolutely. And what I never understood was, I said, if money is the biggest stressor in so many people's lives, why don't we spend more time talking to our children about money?
Right.
Like, it just doesn't make any sense.
Right.
And I'm still trying to figure that out. But to me, I found that a lot of my challenges I face as a black man in America, I've been black my whole life now, was the money thing. It was like,
as y'all can see, I did it. I put them up, so I did it. And these my I did it hands. All right, so we're gonna start talking about the different types of insurances that were brought up in part 1 and part 2 in this video. So if you haven't seen part 1, go back and watch part 1 so you can see what they were talking about when I was talking about that. Talking about the different types of insurances and the impact that it can have and why you should invest in it. But now we're gonna actually talk about the differences, and we're gonna really start breaking these things down in this course and the next course of videos that I start uploading. So first off, we're gonna talk about whole life. Whole life insurance is very simple. It's for your whole life. In the previous video, he was talking about getting cash value back. That is a good indicator of whole life, other than the fact that it's there for your whole life, all right? The other type of insurance is term. Term insurance can get cash value. There's different types of term, like universal, variable, but for the most part, it ends on a term. And then in this video, they were talking about juvenile life. Now, they focused on that a lot, and this is what juvenile life is. You can get juvenile life whole in term, but like he was saying, with it being so inexpensive, it's not even worth getting term, honestly. You can get juvenile life on an infant when they turn 18, that 30 doubles into 60 whole life. But the premium, or the amount that you pay each month, stays the same. So you're getting $60,000 for an infant when they turn 18. So that's why he's saying what he's saying. Now, they brought the thing, well, that's hard to think about your child dying. It's not even about that. It's about the future investment. You're not thinking about your infant dying. Lord willing, they outlive you, because that's the natural order of things. Like, that's what they're supposed to do. Just like when you get life insurance or make an investment, you're not thinking about dying. It's not even in your mindset. You're not, oh, I'm gonna die soon or whatever. You know everybody dies at some point. It's an inevitable thing. You're just thinking about the long-term investment. Oh, okay, well, when it does happen, I need to have some stuff. You're investing into that child without that child even have to do anything. An investment in their future, for their future family or lineage or kingdom. That's how you have to think about it. So that's what juvenile life is. It's just life insurance for a child that's under the age of 18. So from 17 to, with Aflac, I believe they have to be at least 4 months. So, or 6 weeks, I believe, actually. So from 17 to 6 weeks, that's your range for juvenile life. All life insurance is, the older you get, the higher risk you are, the higher the premium becomes. So that's why it's good to invest in them at a younger age. So it's something for you to think about. I want to go ahead and plant that seed. We're going to get more into whole versus term and how to tell the differences and why, which one is better for you depending on your circumstances. We're gonna talk about that next video. Until then, this is the King's Mind. I'm Joshua. You call me Jada Wonda. Kings and Queens, let's get it. I'm out.
This the word of yo king. That's my bun. That's no James. That nylon makes whole scream. And Mo Rain means Mo fame. So